Yo, what up everyone? So this might be one of the most important videos I made because I'm going to talk about the mindset you need to have in order to become a profitable trader. I read these to myself all the time and they really help me out subconsciously with my trading. And I'm confident that some of these points will help you all out and change your perspective about trading for the better and push you one step closer to becoming a profitable trader. I'm also going to get into some charts and the technicals relating to the proper mindset you need to have. Before we get into the video though, I recommend following me on Instagram. I'm going to link this in the description below at Ameritrade. I post daily trading recaps on here along with very good trading tips and tricks that I guarantee you're not going to find anywhere else. Link is in the description below. You're definitely missing out on this resource if you are not following it. But now, let's get right into the video. The first point you need to understand and accept is in the market, you cannot force anything. It's very, very important to let the market come to you. Do not force any trades. A big component to a lot of traders blowing up is because they force setups. They try to make something out of nothing when nothing was really setting up and the market really wasn't a proper market to be trading in. Because of this, a lot of traders let their emotions get involved and they're not very calm and they're not very relaxed. In trading, the best traders that I've seen on Wall Street, yes, they have emotions. Yes, sometimes they're not relaxed. Yes, sometimes they're stressed. But before a trade is put on and during that trade, the best trade that I've seen, they are very calm and they are very relaxed. They don't try and fight the market because if you are stressed, you're not relaxed, you're not calm, you are going to make decisions that your ego is making, your emotions are making, and you are going to make avoidable trading decisions and losses that you could have definitely avoided. So do not let your ego do the trading. You cannot control the outcome of the market. It does not care about your opinion. I can tell you one thing for certain is the market doesn't even know we exist and it doesn't care about our opinion. We are the only ones that care about our opinion and we are the only ones that are let our opinion take us trading losses. This relates to the heat of war scenario. This goes with anything in life. In the heat of war, we tend to make decisions based off of our emotions. We want to be right and we don't want to be wrong. So in this heat of war, maybe when the market is volatile, today was an example of a non-volatile market, but maybe if the market's breaking out, you see something breaking above a key level and you want to play a breakout, maybe above high a day, that is the heat of war. And that is where you're most susceptible to making trading decisions based off of your emotions versus making decisions off of facts. So in the heat of war, it's very important for you to be calm and relaxed. Detach yourself from that type of action. Be an observer and wait for the opportunities to find you. If you look for opportunities, which you have to do, you have to look for the right ones. If you don't look for the right ones, you are going to be trying to find opportunities when there really isn't any type of opportunity. Instead, what I recommend doing is wait for opportunities to find you in the market. You'll understand what I mean once you have skin in the game and you take trading decisions off of your edge. But you have to let opportunities find you. Do not think you have to trade every single move, every single day, every single week. I work with tons of traders. I review some trades, review the journals. And one thing that I see on traders that fail is they think that they have to trade every single move with the market. For example, let me pull up this Apple chart here. This chart screams to me conditions that you should avoid. There is no opportunities, yet some traders try to find opportunities in markets where there aren't any opportunities. Now, they think they have to trade every single move, every single day, every single week. It's more impressive to me if you take a quality trade or 2 quality trades a week versus taking 10 low quality trades a week. You don't accept that you don't have to trade every single move, every day, every week. Like I said, 1 good trade a week, 2 good trades a week, 3 good trades a week is much more impressive to me than taking 10 or 20 shitty trades every single week that are low quality, that you take losses on because they are not off of your edge and they are off of missed opportunities. Now, this will come into realization and you'll accept this a little better when you realize that the market presents so many different opportunities and it just comes to you, it hits you, and it's like this type of feeling and intuition that you know it's there and you know you have to put a trade on because this is when everything aligns and this is when I should be active in the market. The market's not going anywhere. It was here 10 years ago, it was here 20 years ago, it was here 30 years ago. It's going to be here 50 years from now. It's not going anywhere. The only way it's going is if us traders take losses that we could avoid, we blow up our accounts. The market might not go anywhere, but us as traders, we're not going to be in the game and we're not going to have enough capital to be trading in the future. So market's not going anywhere, but us as traders can be removed from this game. The market can't be removed. And another thing is trade the opportunities based on your edge. Everything else is noise. If you are not trading with your edge, you should not have a trade on. Every single thing else is noise. For example, today on the S&P 500, we opened up in between supply and in between demand. The idea for my edge, my strategy is price and volume analysis, looking to take the market short or potentially long at supply. Same thing at this demand zone. So when we opened inside of supply and demand, and in the first hour we moved completely sideways, volume completely lacked, we actually traded way below our daily average. 1.1 million lots traded today at the end of the day compared to an average of 1.6 million. This just screams that there is no opportunity. This is a balanced market, and this is something that you have to really sit sidelined, and it's noise because in this period right here, we are susceptible to taking trades based off of our emotions versus facts. The only factual piece of information right here was the market was balanced, and trading the S&P 500 specifically should have been avoided because you are going to take losses based off of your emotions and based off of what you think is going to happen versus what the market is actually telling you. Now, another way I look at the market is as an ocean. As traders, the most successful traders I know guys that trade oil on Wall Street that make over $10 million a year with less than 15 trades. These type of traders, they go with the flow. Even with myself, I stress this a lot to Invest to Trade members. The idea with the market is it's constantly changing like an ocean. Sometimes it's low tide, sometimes it's high tide, sometimes we got a lot of waves, sometimes we got not a lot of waves. As traders, we have to go with the flow and react to where the current is going. If the current in the ocean is taking you into an undesirable location, you don't have to try and change the direction. As traders, we have zero control of the market. We have zero control of the outcome. Instead of trying to change the direction, as traders, to find success, we have to look for another current or another wave and hop on that. You could take the wave you know you could surf on. You avoid waves you can't surf on. I see a lot of traders trying to hop on a wave or hop in a market that is impossible to trade in, one that they should avoid. And I see some traders knowing the right waves, knowing the right conditions, knowing the right environments, and those are the ones that make the most amount of money because they're taking a wave they know they could surf on. I also want to get into, as traders, we have the best job. It gives us the freedom to do what we want whenever we want. We could wake up an hour after the market opens and still makes money. We could not trade one day because yesterday we made $100,000. It gives us the freedom and it gives us endless opportunities for profit and loss. It's seriously the ultimate freedom. I love trading. It's the best, but it comes with obviously risk, and it's a skill that could compound you money for the rest of your life if you understand the key components and if you have the right mindset. It's seriously a skill that could seriously compound you money for endless amounts of time and endless amounts of opportunity if done right. Now, because of this, we have to be very selective on the energy we give the market. Different conditions bring different environments. Not all the conditions are the same. There isn't a one size fits all in the market. For example, I want to pull up the NASDAQ. because this was a valid trade today and this gives us a good example. So there's two types of markets, balanced versus imbalanced markets. You have to trade a little differently in both markets. And today I want to go over the pre-market plan. I post these every single day in the Discord of the setups I'm watching, levels I'm looking out for, and potential trades that I'm looking to take. We bounced off demand overnight. We created new demand on the way up. We were watching demand or supply to reject. We could capitalize on puts for a move back into demand / lower, and we could balance. And we had these demand zones that we were watching price to bounce at to potentially play calls. We did not want the market to move lower. So with this context, we rejected supply. We had a very large sell-off in the morning. Now, if you came into this demand zone where every single time we tested it, we bounced at, this indicates that buyers are present. However, buyers really are not showing or they're showing effort, but they're not getting rewarded to the upside, which could be a sign of weakness. However, we couldn't get too weak because we're not slicing through supply and we have demand much lower that we bounced at. So intraday, you have to understand the type of trade you're looking to put on. I see traders that are trying to surf a wave for a trend trade when the wave or the current is really for a scalp. This gave us multiple opportunities for a scalp. Hit it once, we bounce. Hit it another time, we bounce. Hit it a third time, we bounce, right? Fourth time, bounce a little bit. Then come lower, break low a day into this demand zone. Nice volume starts pouring in, and we get a nice rally from that as well. So different conditions bring different things. If you are expecting a trend trade in this type of environment like we're seeing today, this is Tuesday, October 12th, the day I'm recording this, you are going to get destroyed versus someone who's a scalper could make thousands of dollars on conditions like this. Same thing on the S&P 500. These are proper scalping conditions. Scalpers will strive better in these conditions versus trend traders. So these type of environments bring different things. You have to accept that not all conditions are the same. There is not a one size fits all in the market. What's key here, I stress this to InvestorTrade members all the time. This is in the market context section of the course. As traders, this might be the most important thing. We have to be open to different environments and trade accordingly to the story that the market is reading to us. There is always going to be one story and one story only, and that's context with price and volume. This is why I use price and volume analysis. It's the most powerful, it's what works the best, and it's what physically drives the market. As successful traders, we have to use any tool, price and volume related, to understand the story the market's telling us, which is why I use supply and demand, VWAP, and this buying selling indicator, because it's all organic price action that physically moves the market. If you're using 100 different indicators and your charts look completely out of balance, out of whack, you are going to struggle, and that's what I consider noise. Noise is our opinions, our emotions, indicators, other people's opinions, rumors. They're all distractions from what the market is directly telling us. For you to be successful in trading, you have to read what the market is directly telling you. The best way to get that is through price and volume. Other indicators might lag. It's not coming direct from the market. It moves because of the market. You must detach from the money. A lot of traders are in this for the wrong things. Obviously, we all want to make money, but a lot of traders want to get rich quick. They want to become a millionaire by tomorrow, and they're too attached to their money. It's the wrong mindset. You have to become attached to your setups, trade to hit your setups, and your setups only. Don't look at your profit. Don't look at your loss. It'll take care of itself in due time as long as you follow your process and follow your edge. Now, I can't stress how important proper risk management is. Use a stop loss because that's going to preserve your money, which you need to protect yourself in order to be in this business. Our money is our baby, and we do everything to preserve and protect our baby. Now, to practice proper risk management, we need a stop loss. A stop loss should be based on where our analysis is proven wrong based off of the chart. Now, I have to be honest, I took a trade today on Tesla. This was from the pre-market plan. I was watching for us to hold above 800. If we could build VVM, which is something that I use to gauge participation in the market. Above 805.30, I'm going to be watching to pinpoint an entry intraday where my risk to reward makes sense. So Tesla opened up. We've used 800 as support. If I go to a 1-minute chart, we used 800 as support as we pulled back into it, and then we had a strong volume push into the 805.30 area. I took calls around 804, 804-ish, 804.50. I played the 810 calls, and I got long at this area as soon as we got that push. As you could tell, volume is very high today, and at one point I was up about $1,500 on this quick little rally about 5 minutes after, but I got greedy. My profit taking plan was 809, 810. We missed it by about 50 cents, and I did not take profits into strength, and instead we pulled back. Now this is where trading becomes emotional. At one point I was down 6,000 on this pullback right here. My risk, my stop loss plan was below 800. So yes, I was down 6,000, but my risk was in place, and I did not stop out of this trade. Instead, we reversed, and at this point, I scaled out some of my trade for $2,600. Now, I wanted to squeeze a little more juice, although 810 did hit. I thought we were going to rally higher as we really didn't have any supply or any resistance above, and we got a pull back down, and I got out the remaining where I entered just to protect myself. It's all about protecting yourself, practicing proper risk management, and not letting a green trade turn into red. If I freaked out that I was down 6,000 right here, I probably would have stopped out if I was attached to the money, right? 6,000 is a lot of money, and if you don't have the mental fortitude to hold on to large price swings like this, obviously I'm trading with very large size. If you don't have the mental fortitude to trade like that, it's not going to work for you. I respected my plan. I stuck to my plan. I didn't look at how much I was losing. I didn't care about how much I was winning. I just knew if we got below 800, my analysis would have been proven wrong. And I knew if we got below it, I was going to stop out for whatever dollar amount it was. So even though I was down $6,000, we came back up, and I didn't let it freak me out. I followed my plan, and it worked out, in the long run. So when your plan hits, your stop loss triggers, get out with no hesitation. Have no fear of losing money. You have to be fearless in this. You have to think less. Do not let your emotions make the decision. Admit you're wrong. And this is going to help your account to survive another day. Don't put too much significance on one trade. There's going to be plenty of other trades. Allow yourself to lose and move on as long as you learn from it. I look at a loss not as a loss as long as I learn from it. If I take a lesson out of it, I can improve from it, and I lost money on it, I don't consider it a loss because I know it's going to help me for the future, and I know it's going to make me a better trader. And if we do stop out, we could always re-enter at a better opportunity, maybe where the risk to reward makes sense, and maybe that winner is going to outweigh our loser, and we can make a lot of money. So I could keep going on and on. I could keep making more points. If you want to see a part 2 of this video, let's shoot for 678 likes. And I could plan on doing another video. So if you've made it to the end, let's try to get 678 likes, and I could do a part 2 on this with more points and more chart examples of actual trades that I took. But I think I'm going to end it here. If you enjoyed, hit the like button. Drop a comment if you have any questions. And if you really want to learn more, check out the links below. I offer a very in-depth and educational course that comes with access to the Discord at no extra cost. But besides that, I'm ending it. Peace out.